continue the third panel session, which is held on the topic Bridging the Markets, Fostering Global Connectivity and Interoperability. This panel will explore the critical role that enhanced connectivity plays in reducing friction, mitigating operational risks, and unlocking new opportunities for capital flow and market integration worldwide. And we invite the moderator of the meeting of the CEO of ISSA, Ms. Julia McKenny, and all of the panelists. You are welcome.
Everyone. Thank you for the opportunity to moderate this session today. It is an absolute privilege to be here with you all. Just now, in our earlier session, and yesterday, we heard about interoperability and connectivity through a positive lens. But we also heard about fragmentation and differing levels of technological achievement and development. We also touched on the need for potentially greater collaboration, and we were reminded of the notion and importance of trust and asset safety. Today, in our panel, we will delve into and how we foster global connectivity and interoperability. Bridging the markets to foster global connectivity and interoperability in the financial services and banking sector presents both significant challenges and opportunities. On one hand, the integration of diverse financial markets can lead to enhanced economic growth, increased cross-border investment, and the seamless exchange of financial services and information. This connectivity can drive innovation in financial products, create new business opportunities, and improve access to global capital. However, challenges such as regulatory differences, technological disparities, and legal barriers can impede this process. Ensuring data security and privacy, managing geopolitical tensions, and addressing the digital divide are critical hurdles that need to be overcome. Despite these challenges, the potential benefits of a globally connected financial market are immense. I would like to introduce our 6 panelists. They will each introduce themselves to you today. I would like to start with Mr. Pan to introduce himself, please.
Thank you. Good morning, everyone. I'm Pan Yongdong from CSDC. Before joining CSDC, I have worked in CSRC, China's securities market regulatory body, for more than 10 years. As you may know, CSDC is China's CCP, CSD, and SSS. It provides post-trade services such as registration, depository, clearing, and settlement services for mainland China exchanges like the Shanghai, Shenzhen, Beijing stock exchanges. I'm really honored to be here and glad to share with you China's connectivity experience later. Thank you.
Thank you very much. My name is Kulik. I'm the Secretary General of ECSDA, European Association of Central Securities Depositories. We have 40 CSDs within the region, within the association, have 5 permanent working groups and a couple of temporary task forces dedicated to the necessary immediate topics that we have on the agenda. Thank you.
Great, thank you very much. Satoru.
Okay, thank you. My name is Satoru Yamadera, but you can call me Tomo. Actually, in English, I'm known as Tomo. That's my English nickname. Currently, I'm an academic professor in Tokyo, the Saitama University. But I just retired from ADB in this June. And Mr. Yamashita, who made a speech yesterday, he's my successor. Actually, last 10 years, I was very much involved in ASEAN Plus 3 ABMI. ASEAN Plus 3 is the ASEAN 10 countries plus China, Korea, Japan. That's what we call ASEAN Plus 3. And under the ASEAN Plus 3, we worked as a secretariat of Asian Bond Markets Initiative. Yesterday, Yamashita-san mentioned about the project Tridecagon, so connecting 13 countries through the POC. We try to sort of demonstrate the different tokens, not only 2 tokens, 3 tokens simultaneously to demonstrate to what extent that we can implement blockchain technology into this regional discussion. Also, I'm happy to share other experience under the ABMI. Thanks.
I think that was a call for many questions for you, Tomo. What do you think? Serge?
Yeah, my name is Serge. I'm part of an ICSDA well-known, which is called Clearstream. It's been 27 years I'm part of the company, or even 28, I don't remember at that stage. I've been through many operational roles, and I've joined the network management in 2010. Since then, I went through the Eurobond market, which was my core business and core knowledge, and I had the chance to evolve through the domestic markets. And it's been 4 years now that I have the pleasure to lead the team, which is taking care of the Americas, the CIS, and also some countries of Central Asia. This is why I have the pleasure to be here, because I'm also a member of the board of independent director of KCSD. And many thanks for welcoming me, by the way.
Thank you.
Hi, thank you. I appreciate being with all of you here today. My name is Phil Van Dine. First half of my career was spent on the market side of the business, trading equities. And the second half now is I work for Citibank. I manage the banks, broker-dealers, private banks, global custodians, and the financial market infrastructures for our Asia custody business.
Alejandro, hi, all the way down there.
All the way over here. Good morning, everyone. First of all, thank you for the WCD for this opportunity. Really, we're amazed by how well this is being organized. So thank you for allowing us to talk about ACSDA here. I am Alejandro Berney. I am president of ACSDA currently, the America's Central Securities Depository Association. I'm also a director at Caja de Valores for the last 10 years. Caja de Valores is the CSD in Argentina. And before that, as Gonzalo mentioned before, 20 years of Citi, where I've always been with the security services business. So thank you.
Great, thank you very much. Please ask any questions and we'll make sure that the panel deal with them during our discussion. We'd like to kickstart, though, however, the discussion today with what are we actually talking about? Okay, so when we say connectivity and interoperability, what are we actually trying to get to? What are we actually speaking about? So I'm going to start with Mr. Pan and then we'll open it up for your thoughts on that, because I think we've all had quite a lot of discussion around that in the build-up to the discussion. Mr. Pan.
Okay. In my opinion, connectivity is just like building a highway between different markets, while interoperability is like having universal traffic rules so that all the cars can run smoothly. If we have both, different FMS in different markets can talk to each other and work together. That would make it easier for investors to trade and invest across borders. I will give you some real examples later. Thank you.
Great, thank you. I saw Tomo, you're nodding a lot there. What did you want to go next?
Yeah, thank you. Under ABMI, from the beginning, we had a strong aspiration how to increase the regional transactions, intra-regional transactions within ASEAN and China, Korea, Japan. Well, it's nice to think of these sort of connectivity, also the transactions, but when it comes to actual implementation, that's not so easy. And so under ABMI, we sort of focused more on the standardization. Actually, the Alex Kish, he's one of the sort of a standard geek who very much involved in this Asian discussion these sort of 15 years ago. Yeah. Well, important point is not only the technology, but also legal regulatory issues also needs to be interoperable. And this requires certain level of efforts. Sometimes it is, people want to see this sort of interoperability as a public good. But unfortunately, the public good cannot be supplied well. So I think that's exactly where the regional discussion or regional entity like ADB, Asian Development Bank, can play the role to facilitate such discussion. Also like this WFC, I think this is a great platform to exchange the views and also challenges, starting from establishing a common understanding. I think that is really the starting point of ensuring interoperability. And also, from the beginning of this ASEAN Plus 3 Bond Market Forum discussion, China has been a very important player. So everybody's effort can create this sort of a platform. So hopefully that we can see this sort of a platform can be extended to the Kazakhstan, as I think Yuji mentioned yesterday. The Kazakhstan is now officially participating ASEAN Plus 3 Bond Market Forum as an observer. So hopefully our work under the East Asia, Southeast Asia can also be extended to the Central Asia as well. Thanks.
Anna, I'm curious about your view.
Thank you. I think that we have two questions, right? What's interoperability and what's interconnectivity?
Yes.
I have particularly appreciated the angle that Toma has mentioned here today, facilitating the cross-border flows. This is really something which has a very deep connotation indeed, leading us to ask ourselves the question, how can we, from the CSD perspective, can be facilitating these flows? And of course, the natural answer would be through the CSD links, right, at the level of the CSDs. Now, so the term interoperability in our traditional CSD world has an additional complexity in it, because we have a very bright example in Europe of the ISSD bridge between the two. And here, not only they have been able indeed to have the links between the two different markets, initially two different markets, they have been able indeed to go 1 mile further to create almost a single market, right? Single market for Eurobonds, single market now for IETFs as well, which are two exceptional examples of how we can be indeed not just facilitating the interconnections between the markets, but ultimately leading to something which is bigger and has a deep benefit, not just for these two markets, but then allowing the access indeed to this almost single market, right, to all the participants, all issuers and investors across the globe. Thank you.
Thank you, Serge.
It's difficult to add more than what Anna has just said. Yes, it's rather more cross-border connectivity that we are performing as an ICSD, right? It's about Eurobonds, certainly, because it started there. But ultimately, we are able to connect to any or 59 CSD in the world, right? And to bring that pool of liquidity onto our platform indeed. First, thinking about ourselves in Clearstream, right? Where we can settle internally among our 2,200 clients, but also indeed with the bridge, which is indeed clearly the definition of interoperability. It has been put as such in the CSDR regulation, especially for that purpose. And the meaning is that two institutions are sharing the same platform and are sharing the same legal environment, are sharing the same service level agreement in order to adopt the best standard practice and to facilitate the exchange of securities and the settlement.
Thank you.
I think next time I'm going to ask to go before Serge. Let me try to give an additional perspective, right? So connectivity is the ability to link markets, infrastructures, participants across borders, which is what we have. But it's inherently inefficient, and there's many challenges that exist with our current ecosystem. So when I look at interoperability, I look at it when we go beyond those links, creating a seamless integration, not just across security types, funding models, different financial market infrastructures, but we're ultimately solving a problem that the ecosystem is facing.
Alejandro.
Okay, thank you, Julia. Well, in our region, for those of you that are not that familiar with it, obviously the US is part of our region, and so it's been of a hub and spoke model, really, in the sense that everybody goes to the US. So issuers that have large capital needs, a lot of times in Latin America, the capital markets are not large enough. Brazil is the exception, of course. But the rest of the markets are medium-sized and some are smaller ones, as Bruce pointed out yesterday. So our largest issuers go to the US because that's obviously the deepest and the largest capital market. So that means that for a long time, for 3 decades at least, a lot of us have had interconnections with DTCC or through a US custodian, and Kevin pointed out yesterday the connection that Canada probably was the first one to establish with the US. So pretty much a hub and spoke model, again, because of the need of issuers, and the largest savings pool is also in the US, right? So the issuer is going after those dollars. And within the different countries, it's been a little bit less connectivity because there are not that large savings pools for the issuers to access. So it's been very much US-centric for that reason. It's worked efficiently so far, again, because of the purpose, as what are you trying to solve, as Phil was saying. The issuer is solving their need very easily. Then you can argue about different legislations and the difficulties and so forth, so everything can be optimized, of course. But so far, it is fairly large from that perspective, and more recently, with the local savings pools wanting to invest into other securities to diversify their risk. We have cases like Mexico and Argentina where half of the equity volumes that traded daily are actually foreign securities. So the way that has been implemented is through depository receipts, the inverse of an ADR. So each country has a local DR. Argentina established a pilot with Brazil, so we also have Brazilian securities issued directly as DR. So we've been solving those connectivity issues in that way.
Great. Anna, you had a comment.
Yeah, so I think we indeed need to be taken into account this perspective only from the CSD side, right, but also from the market side. And what particular Alejandro was saying is this market perspective, right, where we're speaking rather about the interconnectivity between the markets, where it is facilitated frequently indeed through the dual listing, for example, of securities. And now how we can be facilitating this sort of things, it's still through the CSD links Or then, eventually, indeed, what we can be doing is the creation of platforms across the different countries. And so in Europe, indeed, we have very bright examples of the creations of this sort of platforms as well across the countries. From the settlement perspective, we can be speaking about T2S, of course, which is the natural example, but it is still not solving everything, right? So we do have major constraints in terms of the standardizations between the markets, making sure that indeed we do respect the settlement cycles, for example, as the basic example, right? Which contributes then this market interoperability. And without the market interoperability and the volumes that can be going through the side of the trading, right? It's very complicated then to be seeing the necessary flows on the CSD side in order then to be able to support it. Some can be saying that you establish the link and then you will be seeing the flows. But indeed, I would say that rather, indeed, there should be a demand first, and then, of course, the CSDs will be very happily able to support this interest from the stakeholders of both countries. Thank you.
I just wanted to add something compared to the panels that we had before, where interoperability especially for the people who talk about tokenization and digital asset, they were talking about the platform or the system, you know, they are interconnected one to each other. It's very easy, and you'll see, and the future will be bright or going into that direction. That's I fully agree. But indeed, here on that panel, we are taking the definition of interoperability a different way, just to make sure that everybody got the same understanding.
Good. Thank you. Well, that's probably a good segue into the next discussion point that we had, which was basically what does good connectivity and good interoperability look like in terms of case studies that are out there. And I think, Phil, we're going to start with some of your thoughts on that.
Well, so as I mentioned earlier, is good interoperability is when we're solving a problem, right? And so being based in Asia, I'll use the Hong Kong-Shanghai Connect. Now that's a bilateral link that they've expanded. But if you go back to its inception, and I get it, if you speak to the CSDs and the markets themselves, they might give you a different flavor. I'll try to give you a flavor from a client investor perspective. Going onshore into China, where many investors wanted to go to, it was a 6 to 12-month process to go through the licensing, establish a custodial relationship, and ultimately open your account. Another problem for the international investor coming from the US or Europe was that it's a no credit pre-funding type of market, and it wasn't as easy to move money efficiently. I mean, even moving US dollars around the world is not efficient. But having to move money before you could trade impacts a portfolio manager's ability to manage their portfolio, invest, et cetera. So on the Hong Kong side, where all the international investors, all the big asset managers, fund managers, banks, et cetera, were already involved in the market, had a infrastructure, a custodial relationship, et cetera, to access that market and operate on a freely traded currency perspective. It was an ease of access model into Hong Kong alone. Then when they built the link, what ultimately, and it was still an ID market, you still needed to go through that process, but that was shrunk down ultimately to 2 weeks to maybe 6 tops. And so all of a sudden, you had a very easy access into the China market. And fast forward now, I think it's 8 years beyond, and I'll just give you some anecdotal information, right? So what we see as one of the major custodians, we have about, I would say about 106, 110 billion directly into China equities. 30% of that is going through the legacy onshore channel. 70% of that is coming through the Hong Kong Connect schemes. And what does that really mean between the two depositories, right? CSDC still gets, because ultimately it is a Chinese assets that's held in China, so they didn't have any drop in their transaction volume revenue streams. Actually, Hong Kong got to play that role, and they created an additional revenue stream beyond their home market, right? So it was a win-win across the board. And then the investor client doesn't have to pre-fund. They can trade throughout the day, and they just need to fund by the time of settlement. So same-day funding is not pre-funding, whereas before you had to move the money onshore before you were even trading, right? So it solved an investor problem. It solved a market access problem, and both sides continue to maintain their volumes. So I would say that type of linkage where they saw a problem and addressed it is what made it successful. And it continues to grow. They're rolling out, I mean, you know, you got equities, bonds, swaps, repos, you know, they're just continuing to build upon that channel because there's demand from the investment community. And so as we look at interoperability, and we'll talk about it a bit later, we're going to talk about tokens, digital assets, et cetera, and I think that there is a fantastic use case for, you know, the CSDs in the room and the other market participants to work together to solve an inherent challenge that exists there that we can unpack a bit later.
Can I add on that? And I agree totally with Phil. And what I think that we're missing the word here as to whose problem are we trying to solve, and it's really the institutional investor, right, Phil, in that case. And I think it's similar in Latin America where the ICSDs have a lot of linkages sometimes with the CSD directly, like in Argentina's case, other times through local custodians. But really that's for the institutional segment. That's the one that it wants the access and it wants it in a determined way with everything that we know about. But the depository receipt solution has proved much better for the retail investor, for example. So clearly, a lot of times we talk generalities and we're not talking about the different segments and different needs, and that's where we need to go back to say, okay, what problem are we trying to solve? What is not working in terms of efficiency, because it means different things.
Yeah, I mean, I completely agree, because we tend, on the custody side, we tend to talk about segments. And the reality is the retail segment is increasing exponentially. I mean, I think when you talk about Brazil, you talk about India, you talk about Indonesia, you know, the rise of retail/wealth has been incredible, and we're seeing more and more of the depositories taking note of that and looking at how they can offer solutions to meet the needs of that client segment. And we tend to talk about the institutional flow legacy-wise because that's what we were all trying to attract, trying to get the asset management flows, the asset owner flows, even the sovereigns flows. But that retail segment is just continuing to grow, and things like DR programs solve a need and a challenge for them right now.
And sorry, not to monopolize, but since I'm the Latino here, I'll live up to my stereotype. Yes, for example, in our depository, we have 20 million accounts, 10 million different investors. That's 20% of the population. And it's not high net worth, it's actually very small clients. Because of the macro problems in Argentina recently, in the last 5 years, everybody has accessed the market because they needed to protect their savings. So a lot of times, obviously, you need to be ready from a tech perspective in order to be able to scale up like that, but it's clearly a very good way of growing.
Great, thank you. Tomo, I just was curious whether you had any case studies when we're thinking about what good is going to look like. I thought.
Okay, thanks. Let me start the sort of important sort of a classification, so the realization. Well, first, the harmonization standardization is different. Often people want to see the single rule applies to everywhere. But frankly speaking, harmonization is difficult. Even Europe, single currency, but when it comes to the capital market, each market may have different rules or conventions. So at least what we can consider is increased interoperability. But to ensure the interoperability, we need to have some sort of a standardization. And that's where the standardization becomes important. And then we may be able to ensure the interconnectivity. Under ASEAN Plus 3, actually our members are the central banks and regulators and the ministries of finance. Listening to what is happening in Latin America, I very much envy the situation, the way we set up, but since our regional discussion need to respect the policy makers' objective, so the like ADR or whatever the other side, you know, U.S. stocks can be traded in the local stock exchange. Unfortunately, the Asian jurisdiction may not like that sort of transactions because they want to promote their own currencies, their own capital market, and they want to see the funds recycling within the country first, and hopefully that their foreign investors may come into their domestic market. How to promote? There are many ways. Like Bond Connect is a very good example, actually. And I'm sure there were a lot of works done by the HKMN, CMU, and the Bond Connect people because legally there are differences. And given providing some sort of the assurance to the Chinese authority, we could establish this sort of omnibus account in Hong Kong. Otherwise, everybody must follow the Chinese sort of a regulatory framework to be segregated in account of the CSDs. So important point is we need to focus on the standardization and focus on the interoperability. But to ensure the interoperability, we need to understand the situation in country N and B, and also the C, D, so that we may be able to find this common ground. Well, under the ASEAN Plus 3, what we are sort of doing, particularly to ensure this interoperability, is focusing on the professionals, professional investors. Because once we involved retail investors, again, we must respect our fellow regulators, and they are always concerning the investor protection. And even they prefer to see the local language documentation, local accounting rules, local disclosure. But if we focus on the professionals, they can pass their responsibility to the professionals. Since professional financial institutions, they should be able to assess the risks. They can manage the risks so that the regulators can have some sort of comfort. So we may be able to create some sort of a common space. So I'd like to emphasize that the operation of standardization, not only we need to focus on the technology side, but also we need to consider how we can sort of make the interoperable regulatory framework. And legal issue is very important, even digital asset tokens. We talked about a lot of issues related to the digital asset in the previous sessions. But the important point is, at the end, these regulatory issues, legal issues, even not just the regulations, common law, civil law, these differences in the legal sort of tradition may create the differences. And we need to work wisely how to sort of mitigate those differences. This is not easy, but I think gradual step of establishing a common understanding within different jurisdictions we can achieve. And that's what we have achieved through the ASEAN Plus 3 discussions.
Great, thank you. Anna, I would like to go on to that solving, like how we're going to solve these issues, but you go first.
Yes, thank you. So now that Europe has been mentioned particularly indeed. So in Europe, one of the major concerns that we're having indeed in the context of this conversation is the fragmentation of liquidity. That's something that we're hearing frequently and from the policymakers and from the biggest of the international investors, for example. From that perspective, of course, we can be saying that 90% of the flows in Europe are already consolidated through the major infrastructures and hence through the major groups of infrastructures, and hence we have been able to facilitate the access already from that perspective, at least partially. Now, I think we also need to be still keeping in mind that Europe, despite the fact that indeed we do have large portions of very common legislation in Europe, the CSD regulation already, so indeed the root causes that Thomas has been mentioning are still not addressed. So in fact we have 8 currencies in Europe, and even in Eurozone, when we are speaking about the challenges that we have with fragmentation, we still need to be keeping in mind that we have the different security settlement systems, which lead to the fact that we cannot be scaling, we cannot be harmonizing totally across the countries because indeed of the different asset protection rules which are applicable, because of the fact that we still are settling on the books of the different central banks. And strangely, despite indeed the fact that we have the Eurozone, we still settle the cash leg, unless we're speaking about the ICSDs which are having the banking license, on the books of each and every central bank. So that's certainly a challenge, and as we know from the basis of the international conventions, we need to be considering what is the applicable law, and this applicable law is the place of the security settlement systems, which lead to the fact that we can be then defining indeed which tax laws we should be applying, which company laws, which insolvency laws we need to be applying to the transaction. And hence the solutions that can be very complex, but I think we're largely able to find them. So within my membership, we have a very nice variety of different solutions. Some of them indeed have been able to build upon T2S, indeed a new layer, an additional layer of the consolidation of the corporate actions events as well. So here, for example, Euronext or as a CSDs from Euroclear or Clearstream, of course, are able to facilitate this access for the international investors and solve the complexities for the international investors, take on them, and indeed try to harmonize as much as possible, at least the insights, so the access to the system and the view that the investor is having across these different groups. So that's largely a major step already. We do have challenges that still remain for the CSDs themselves, but that's the challenge that we're happy to accept, of course, as being the major infrastructures. Thank you.
Thank you.
If I can add on that, just to continue with my stereotype. Yes, maybe this should be a panel of all lawyers, I was thinking. Because technology is not the problem, right? You just pick one, okay, you need to decide, but then once you pick one, you implement. And there are newer and better technologies, as we heard before, but without a common framework. And we're seeing this in LATAM as well. Right now we have 3 countries that their capital markets are merging, and it is very difficult for them to create scale, having different frameworks, regulatory and legal, and even central bank frameworks. Not even different currencies, but just the profile of the central bank with different monetary policies. So very, very difficult to create scale, and if we don't create scale, we're not really getting efficiency back to the end investor, so he is paying it out of his savings.
Great. Serge and Phil as well. But it's exactly, so what are we really trying to solve? And is it technology solely? It's not really, is it? It's regulation, it's law, it's all of the basics around that. So Phil, did you want to go first or Serge?
I was going to defer to Serge first.
Okay.
No, I just wanted to say that indeed what Anna has raised is absolutely right, and also the fact that we tried in the past to have less CSDs, right, by merging, etc., and we were very good in our group at failing in such a merger because of the regulators themselves, right? Because they thought that we would be in a dominant position, and hence it was not possible, and I would rather prefer a kind of fragmentation somewhere. So maybe since then, it was 10 years ago, since then a lot has happened, and maybe indeed, to your point, Moto, that the regulator has to think commonly, to come to and address the true reality of what the world of tomorrow will be like. And certainly every CSD will be very happy to participate to the maximum extent in order to make the market more efficient. That is for sure. Phillip, sorry.
Yeah, so I look at technology as both an enabler, but it also poses additional challenges, right? So let's talk about one of the trends that has been happening. It's been spoken on a number of the other panels, settlement compression that's going around the world, right? Settlement compression in itself, we know, okay, brings efficiency, reduces margins, et cetera, counterparty risk, all of that good things. But look, the Americas has gone through it, Europe is going through, and Asia's gonna come shortly after. And why? We can't have a fragmented settlement cycle for global investors, right? At the end of the day, they're selling stocks and securities to buy others, right? So we need to align settlement cycles. But what does that bring? It does bring liquidity and funding challenges, right? I talked earlier about just simply moving US dollars today. There's cutoff times. Based on where you're at, you need to send it multiple hours ahead of time for it to arrive at the destination. So that's a problem. Now, technology, right? So we heard about tokenization of dollars. Why is tokenization happening in the dollar terms? It's not just a competitive factor against these crypto firms. We can now move US dollars through a token instantaneously to meet margin calls, funding, and liquidity requirements. Number one. But guess what? There's another problem that's coming. Stable coins. Right? That's a great solution. It's a technology. I can now move US dollars. I can even convert them into other currency stable coins. But as a custodian, this is the problem. The clients have obligations to me. I then have obligations based on their activity to you. They're going to want to use stable coins. Some will still be on traditional fiat currency. I'm going to have to figure out a way to manage those too. And I'm going to come to you and say, hey, I need you to give me the ability, because I don't want to take all of this on my balance sheet. I'm going to want to park some of this with you so that you can net off my exposure potentially against various coins, and there'll be local coins in your market. I'm not saying that's here today or even 2 years from now, but Genius Act has been passed. The regulatory framework is happening. This stuff is now moving at an accelerated pace. What's been going on for the last couple of years is we've all done proof of concepts. You know, again, tokenized dollars, tokenized securities, collateral management. You know, the technology is enabling a more efficient use, and it's under this token. So the firms understand it. They've built it. Now it's going to be industrialized. And that industrialization is going to happen a lot faster than we think. I appreciate the work we did with Martin and Value Exchange, and I was very happy to see a number of people quoting the research that we put out. But again, we talked about the data came back from all the participants that 10% of the world's market cap is going to be on digital assets, 16 trillions by 2030. That's 4 years from now. That's a lot of replatforming. That's a lot of development. That's a lot of investment that needs to go on. Technology is the only way we're going to get there, right?
Well, I saw that stat as well. Do you think that's realistic? Do you think that's accurate?
So let me give you a couple more data points behind that.
I'm a cynic,
right?
but I just thought I'd ask.
So we also, within the research, we talked to the front office, the back office, legal, compliance, et cetera. And we asked them, what are the main things that you are focused on and taking a portion of your day? The number two things across all of those 5 groups within everyone's organization: settlement compression, digital assets. So I understand that the legal and compliance team would have to look at it, but when operations, front office, C-suite, legal, compliance, et cetera, are all coming up. And it's not 5%, it's 40% and 27, 30%. So 70% roughly is all about those two things, which means that every area of the firms, and again, this was banks, brokers, financial market infrastructures, investors, private banks, global custodians, everyone's working on it. Now, you know, are we ready? But, you know, a year ago, it wasn't that, right? So we're seeing the trend through this data that's coming out. So if we see that projection of the value, we already have live use cases of tokenization for the effective use of collateral. We've already have digital assets. We talked about Hong Kong digital bonds. These things are now in our ecosystem on the institutional side. So I believe very strongly that it is coming, and it's going to be here sooner rather than later. And I think interoperability, because another stat I just want to throw out is, and I think it was mentioned, 50% of the respondents felt that the future ecosystem is going to be the FMIs and the custodians. And I think it was yesterday they were talking about, well, what's the roles of CSDs, et cetera? It's trust, right? We're the validators of trust. So if the ecosystem already feels that these two players are going to be, they want us to be a part of that formulation of the ecosystem, then it's us in this room to get together and say, okay, how can we leverage that technology, build some interoperability so that we then play a role and we design and navigate, whether it's public or private. I was talking to Alex. You know, I think we ultimately agreed on permission versus, you know, he was still very much public, and I was like, it's going to be a private permission. But ultimately, if we work together to kind of create that ecosystem, that DLT blockchain permissioned across the networks, you're inherently already connected to all the investment activities in your home market. You have your local member firms, those are brokers, those are banks, those are investors coming through them. It's a natural network that we can leverage the technology to bring these new asset classes into the ecosystem.
Great, thank you. Serge,
did you
want to pick up on that trust point? Or?
Yeah, the question of trust is crucial here, right? And as you rightly said, so the pace is quite fast into this new technology world. However, the role of the CSD will remain the same, and one of the roles of the CSD will remain the same, is protection of the assets, safety of the assets. And that is something that a platform cannot guarantee. However, in our role, yes, it's something that we will pursue in the future. I mean, I feel very much from the past world at the moment, right? After all this panel about the new technology, etc., etc. But bon, I arrived in Almaty on Monday, and one of my first duty as network manager was to go and see my peers with whom I have a partnership here, and to make sure that indeed they are still resilient, whatever is their system, what is the new regulation that come into play, how does it affect the relationship that I have with them, and once again, the asset protection that needs to be, that is part of our duties, and where ultimately, whoever is in the investors, being a retail at the end or institution, this is the responsibility and the guarantee that we have to deliver to them, right? This is where we are. I fully agree. We are a little bit in the blur, in the cloud of how we're going to move forward. However, I'm sure that at the end of the day, all together we'll find a way, because there is no other option.
Thank you. Thank you. I want to go back to a bit of a market level now, if that's possible, and look at what tangible steps do we need to take at that market level to enhance interoperability and access a bit better. So, Mr. Pan, I was going to start with you.
Thank you, my panelists. They were mentioned the main channel and Hong Kong Stock Connect. I think it's a very great idea. It has been working so well since its launch in 2014. Now, it's the main channel for foreign investors to trade A-shares. By the end of 2024, mainland investors held over 3 trillion Hong Kong dollar in Hong Kong stocks, and northbound investors held over 2 trillion RMB in A-shares. Why has it worked so well? I think it's because Hong Kong and mainland China have strong economic ties, active two-way investment, and investors who understand both markets. The model is very innovative. Exchanges, CCPs, and CSDs in mainland China and Hong Kong are directly connected. Investors trade through their local brokers. Orders go through their local exchange to the other market. Clearing and settlement are handled by CSDC and Hong Kong SCC, the CCP and CSD in respective market. In this process, CSDC and Hong Kong SCC act as each other's clearing participants. They open nominal accounts in each other's market and undertake settlement obligation for each other. DVP is also used to make the settlements are safe and efficient. We've also made a lot of improvements over the years. First, more types of securities are included, like WVR stocks, non-profitable stocks, and ETFs. Second, we've optimized the trading calendars and improved continuity during bad weather in September 2024. Third, we reduced the margin requirements for South investors. Last but not least, we introduced an investor ID code to improve transparency. Looking ahead, CSDC will further optimize the stock connect to make it safer and more efficient. Thank you.
Thank you very much. Tomo, I was going to call upon you to get your thoughts as well about local market enhancement.
Okay, thanks. Well, I don't want to go too much detail on legal issues. I mean, we talk about the lot of potentials of digital assets. But let me reiterate, those transactions are not legally challenged yet. So we need to be quite mindful. For example, the legacy system has a long tradition and long case studies so that we know that what may happen. For example, the crypto asset, particularly public chain-based assets. The private key is really the representation of your entitlement. So regardless the private key is stolen or whatever, the private key is the proof. But on the other hand, existing, or we may call it legacy system, there are certain procedures to ensure your entitlement. And those are the trust, the basis of financial transactions. So we are still in the process of searching how to mitigate those new transactions and legacy legal practice to give you a great comfort particularly when it comes to the cross-border. This creates the additional headache because how to ensure your entitlement is not always the same as in the different countries. But to me, the role of CSD or legacy system, I still have the trust because the public chain, particularly under the proof of work consensus algorithm, it is very much based on the majority rule. I don't want to be directed, I don't want to be offended my financial entitlement just because majority thinks that, my entitlement needs to be transferred. So there are a lot of detailed, legal issues, and these needs to be discussed, and this requires great efforts, and also still we are in the process. Actually, when we conducted the POC, connecting 3 different tokens simultaneously, we intentionally put our sort of constraints to follow the existing regulatory framework, not to change everything. And at the end, we come to the realization that in the private or consortium chain, the governance structure means the sort of how to establish the agreements within participating institutions. The trust within institution is really the key. So in any case, no matter how we utilize the new technology, we need to think how to ensure our trust. Well, the public chain, we often say that it's a trustless system, but actually the system is based on the trust on algorithm. So, the public chain does not trust authorities, governments, but they believe in the algorithm, even though it's majority rule. So the existing system has some sort of a trust in the government or trust in the CSDs. In any case, financial transaction must ensure this trust, but we are still in the search of how we can sort of smoothly shift this trust with new technology. Still, we are searching for the good solution.
Anna, did you want to say something? I can see Phil as well, because I want to touch on that point a bit more. So you go.
Yes, and I'm not sure whether we are still speaking about the market interoperability or the technology. I think we have mixed it all, right, somehow. But indeed, to your question on the concrete steps that can be helpful to facilitate indeed the market interoperability, I have now written down indeed the 6 concrete steps, so that responds very, very clearly to your question. First, indeed, I think when we're speaking about the interoperability of the markets, we need to be clearly making sure that there is a proposal of the trading, that there is the visibility of the companies, of the issuers that are available in other countries than to the investors in other countries that are interested to invest in these countries, first of all. Secondly, there should be then the connectivity which is established, and that can be done indeed either through dual listing eventually or otherwise, but there should be indeed this possibility to trade the securities in different assets. And that connectivity can be, in our world, ensured by different routes, by different channels, whether these are the custodian banks or a succession of the different custodian banks, or CSD links indeed. Whenever there is this sufficient volume, we will be able to step in. In order to start the efficient link, you need to be going 1 mile further to make it really scalable. And for that, you need to be having harmonization and standardization, as Thomas was saying. And indeed, even in the Eurobond context, so the real success story with Eurobonds has started when ISMAC, and I think Brian from ICMA was mentioning that. So only when indeed the ISMAC was created, so this special group which was focused on the standardization of the Eurobond markets, then we have been seeing indeed the bigger volumes starting up and taken forward. Then if we want to go 1 mile further again, so then we can be creating indeed platforms across the countries that requires a next level of harmonization, which is bringing the countries closer then. And then, indeed, these links should be supportive, and these platforms should be supportive of a broad range of assets as well. So, of course, it's easy to be establishing it just for debt securities, for example. That's the easiest. It requires less consideration from the tax perspective, for example, or indeed lesser concerns with regard to the company laws. But then, as soon as you have the interest of the investors in one country to debt, probably you might be having one, and particularly, of course, when you have the high level of visibility or a single index in the country, or across these countries, then you can be having the interest for the equities as well, and then other types, so funds or whatever. And in such a case, of course, that's an additional level of complexity that we should be able to support, and that's another angle. My final point would be to combine indeed what colleagues have been saying. We need to be considering how to inject and defragment all these layers of different infrastructures through the use of the technology in the view of the global going further worlds. And from that perspective, in our environment, and particularly in Europe, we're seeing that the different DLT platforms have been already created. SZX, for example, in Switzerland, a very beautiful example. We also have DFMI from Euroclear, we have D7 from Clearstream, all these very beautiful examples, but we do see that we are again replicating the fragmentation. And that's because of the fact that indeed the legal aspects have still not been addressed in the DLT world either. And hence it is fundamental to defragment, to start right, and probably leverage this current situation where we're just beginning indeed with the rollout of the digital securities with the new layer of just as much as harmonized and standardized environment as possible for this new world which is arriving. Thank you.
Yeah, good, thank you.
So if I just may, I just want to connect the dot between interoperability and technology, as you said, right? So where we're at as a current state is, yes, harmonization, legal, regulatory frameworks, structures, standardizations, all of that is critical. Now, if you look at the future asset classes, whether it's private assets, tokenized assets, cryptos, et cetera, those are going to be on digital asset chains. That's a whole nother investment vehicle, et cetera. And they got to go through their own standards. The people in this room, we're already the experts at managing global trade flows. So why wouldn't we want to bring in private assets, native digital assets, our real world assets, into our environment as the providers of trust, leveraging technology to make that happen? We can do that a lot faster, and I know it's a lot of work because we're on this. We can do that a lot faster than the digital guys can go into the traditional space. Yes, they can create the links. Yes, they can support the retail type of investors. But the moment they go into the institutional world, they're going to get hit with all the regulatory environment that we're under. So again, that's where the technology brings that together. And we should be having an eye out for that now, because it is going to take us a couple of years to understand and bring in that technology and create ultimately the ecosystem for those assets and traditional assets to sit together.
Thank you.
And if I just add as a final point is that it's been many years that our company has proven to use the best standards and to prove that they are indeed this entity of trust. I don't see why it could not be possible in the future to do so. And we have to advocate for that, even though some in the panel predicted that we might disappear. But I think that our records has proven that whatever the environment was, because it has changed already over the last 30, 40 years, right? We were able to comply because we had also a good governance, because we have also a good understanding of what are the needs of the market. And therefore, I'm confident that the CSD will remain as such, as the entity of trust.
Thank you. We are out of time and they're really going for it on the TV. But before we go, each person, 2 questions. Is it too hard? And what will future state look like? Alejandro. We've got like, I think about 5 seconds each.
Is it, I'm sorry, is it too hard?
Is it too hard?
Well,
Is
it's too
access
expensive.
hard? Okay, too expensive.
So we all mentioned how difficult it was to implement the new technology. Again, I think it's a money problem, not a technology problem.
Okay.
So it's a matter of investment budgets. So yes, there's going to be a lot of investment to solve this. But we're going to have to, because I was thinking, you know, having a balance sheet to carry settlement risk is very inefficient use of your balance sheet, right? So the move to T+1 in our region, several countries, it's motivated by more efficiency. We heard yesterday about settlement efficiency from Jesus. Well, it's about financial efficiency, and they're the ones that are driving the priorities. So yes, we're going to go to instantaneous settlement sometime, because that is the most efficient use of your balance sheet.
Okay. Thank you so much. We are absolutely out of time, but thank you very, very much. Thanks.
Thank you to the speakers and Miss Julia McKenny for moderation. Let us make a photo of you and accept, please, small gifts from us. Thank you so much. Now we're inviting to the stage Director, Head of Corporate Strategy and Public Affairs Department, TDCC, Ms. Julia Wang, with a case presentation on the topic, the role of the post-trade community in advancing sustainable development. Please welcome.
Good day, distinguished guests, colleagues, and friends. My name is Julie Wang. I'm honored to represent TDCC, the Taiwan Depository and Clearing Corporation. Today, I want to talk about something often overlooked, yet deeply powerful, the role of CSD, the post-trade infrastructure of our market, in shaping a sustainable future. Okay, next slide. Okay. Beyond administration, the larger role of CSD. Traditionally, CSDs have been the invisible hands of the market, ensuring that the trade settled, assets are safe, and ownership are properly recorded. These are essential jobs, but if we stop here, we underestimate ourselves. Are we just record keepers, or can we be the change makers? Think of it this way. Every transaction, every vote, every disclosure that flows through our systems is a chance to encourage a responsible company that cares about the environment, society, and long-term vision, and to expose or discourage those that don't. This is more than an administration, this is influence, and with influence comes responsibility. Okay, please, next slide. Let me begin with Taiwan's market, which illustrates the potential well. Taiwan ranks among the world's top 10 capital markets. Nearly 70% of the market value comes from the technology sector, led by the company like TSMC with its global supply chain. Foreign investors hold more than 40% of our market value. This is the evidence of trust in our governance. Taiwan also ranks third in Asia for corporate governance and leads ESG indices among emerging markets. What does that tell us? It shows that transparency, governance, and responsible behavior are magnets for confidence and investment. And it is the infrastructure like you and me, TDCC, that quietly keep this system working. Please, next slide. So why does post-trade infrastructure so important to sustainability? Because we are the foundation of the markets. We can leverage our role in 3 ways. First, supporting sustainability products, green bonds, carbon credits, tokenized assets, all the new classes that requires infrastructures to function. NASDAQ and the global custodians are already moving here. Second, improving ESG data transparency. Aggregating, standardizing, and reporting ESG data helps fight greenwashing. Third, embracing new technology, AI, distributed ledger, and cloud computing, promising new efficiencies. We, CSD, with our legal certainty and neutrality, are best placed to implement at scale. This is where CSD can go beyond administration by embedding sustainability directly into the financial DNA of our markets. Let me introduce the next slide, please. Let me introduce TDCC's sustainability journey. Over the past 15 years, TDCC has actively developed services related to ESG, which focus on 3 pillars: voting and stewardship, ESG ratings and data, and climate solutions, with 5 major services: e-voting, cross-border STP voting, the ECSDA platform, e-meeting, and e-notice. Importantly, corporate governance should not be viewed as an one-time exercise at the voting moment. Rather, it is a continuous process of engagement between company and its investors. This is why we devote significant effort to provide a range of services, and we do see a great recognition of ESG rating of Taiwan's market. Please, next slide. Thank you. Now, we move on to the first pillar, voting and stewardship. Nearly 61% of the shareholders' votes in Taiwan now happen electronically. 120 companies hold their hybrid shareholder meetings using our solutions. And over 17 million shareholders' notice are sent electronically, reducing paper and emissions. Our ESG desk, and please, next slide. Thank you. The second pillar, ratings and data. Our ESG dashboard consolidates assessments from 8 rating agencies. We also educate our issuers on how ratings work, empower them to improve, not just report their ESG performance. Please, next slide. The third pillar, climate solutions. Taiwan is vulnerable to climate change. This year, we launched a portfolio carbon footprint services. This prepares investors for the 2026 disclosure requirements. All these examples show that CSDs can and actively shape companies' behavior, not just document it. Next slide, please. Of course, the path is not simple. There are challenges. Artificial intelligence, it can accelerate ESG analysis, but its energy use raises sustainability concerns. Regulations. ESG disclosure rules are fragmented, heavy in Europe, contested in the US. Companies face big tech, and infrastructures like us can help streamline. Technology disruption, blockchain and tokenization are promising, but without integration with FMIs, they cannot scale. These are challenges, but they are also opportunities. Posting infrastructures are uniquely positioned to connect the dots, set the standards, and embed sustainability into the very foundation of the market. Next slide, please. So what does the future look like if we act? Imagine a global ecosystem where carbon credits are tracked transparently from issuance to retirement. ESG data is standardized, verified, and accessible worldwide. Post-trade infrastructures themselves achieve carbon neutrality, leading by examples. At TDCC, we are committed to revising ESG Code of Conduct in Taiwan, enhancing portfolio tools, and investing in AI, blockchain, and cloud computing. But the vision is bigger than TDCC. It's about CSD everywhere, taking action, not just for the market we run, but for the society we shape. Please, next slide. In conclusion, sustainable development requires sustainable infrastructure. We are not just silent administrators. We are guardians of integrity, trust, and accountability. And now we must evolve from being silent protectors into active leaders. Leaders who encourage responsible company, leaders who align markets with the needs of society, and leaders who help turn sustainability from a slogan into long-term action. This is not just a vision, this is our commitment. And please, next slide. Finally, so let us do it together. Thank you very much. Thank you.
Thank you very much. Let us give you a small present from us. And let's make a picture. Let us prepare the stage for the next speakers. We appreciate you for waiting for us. Please welcome our next speakers, CEO of ISSA, Julia McKenny, and Mr. Mark Jim. We're happy to invite you to the stage again.
Hi everyone, I'm back again. I will be on time this time, apologies. My name is Julia McKenny. I'm the CEO of the International Security Services Association. I've been in this role now for 116 days, and I'm loving it. But I did want to introduce ISSA, as we call it, to yourselves today, if you haven't heard of us and what we're doing. And also speak with one of our key members, and also a board member, Mark Jem, about actually, because I can tell you about ISSA, I can explain what we do, I can give you all of the great things that I think we're doing, but I thought actually if you heard from a member, and we haven't prepped this, I have no idea what Mark is going to say. But I thought at least if you can hear, I'm slightly nervous, at least if you can hear from a member as to what we are doing and how much value I think we're adding and what we're actually achieving. So very quickly, if I could, what we're about, what is our mission? Well, it's to connect security services industry leaders and stakeholders. It's to collaborate on key themes that impact all participants in the security services value chain. So think of that whole ecosystem of all of those touch points. That's what we're trying to pick up on. That's who our membership are, and that's what we're trying to solve, issues that impact that value chain. Our mission is to change the industry through the development and delivery of forward-looking solutions to help educate and influence the industry and its stakeholders. And I do believe we have a really fundamental role in educating and training and being aware and ensuring that we're cognizant of impact, of change, and ultimately what's going to happen in a very look-forward and progressive way. So what do we believe? We believe that by connecting its members and facilitating collaboration, ISSA provides the leadership necessary to drive change in the security services industry. And for me, I'm quite passionate about our focus, which is progressive solutions and reducing risk, and to improve efficiency and effectiveness, from issuers through to the investor. So what does this look like in action? And I'm sure Mark will speak to it, but in action to me, it's trying to be as relevant as possible to all of our members. So I do a big reach out and I say, are we achieving what you'd like us to achieve? What could we be doing better? I don't think you can learn enough, and our members are fabulous in that they come back with lots of great ideas. To be proactive and less reactive. I think this climate of constant change is absolutely, goodness, sorry, I'll put that down. Is absolutely upon us, and I think trying to be proactive and not reactive at the moment is really important. To be time sensitive. So we all have capacity constraints. So, and one resource that we will never get back is time. So basically just to ensure that what we're doing and how we're doing it is in the most time-sensitive way possible. And I use this expression, digestible. So we have a lot of publications that you'll see, but the key for me is also to put those in a digestible form, because time is of the essence to most people. And last is to be curious. You know, we know what we know, but what don't we know? So asking questions in terms of what impact is going to occur in the security services industry. Very quickly, so this is some of the things and the new developments that we've been working on. So there's been a member outreach, as I mentioned. We've been going to all of our members to ascertain our level of value and to ensure we are relevant. We're developing people agendas. I think talent, education, etc. within the industry is really crucial. I was pleased to hear from Phil at Citibank, who was on the earlier panel, that people now want to get into post-trade. They're enticed by digitalization and digital assets. So that's great, but it's really in developing that agenda, I think, as well. We do have a Women of ESA and their allies agenda also, and a large program around that. The ESA snapshots. This is also all about ensuring that we're looking at current topics and talking to our membership about those. We've recently done some Asia-Pacific recruitment because we would like our membership to be very broad in its scope and coverage across jurisdictions. And that really means that we need to tap into Asia-Pacific and Latin America a bit more when you look at our membership demographic. Events like the event today, talking to people. There's a lot of events that are occurring, CIBOS and then the Network Forum in Hong Kong. Membership development, so as part when we go out and meet lots of people at events, we're talking about ESA, what we're doing, how people can benefit from it, what it means to be a member, what it means to attend working groups, and also collaboration. I think, you know, I touched on before the point that time is of the essence and we don't have a lot of it. And our thinking around that is if we can align with other associations to achieve similar results for our diverse memberships, I think that's beneficial. We can leverage off each other and we can utilize each other in terms of advocacy and implementation of some of the guidelines and thoughts that we have. These are some of our working groups that we have currently, and where some of them they're all in different stages, essentially, but you can see digital identity and onboarding, you can see cyber, a huge risk across our industry. The uncertainty working group, that's about, you know, what ideas and themes are out there that perhaps need a little bit more thinking about before they become a digital assets working group. So we're trying to capture on some key themes, and if you think about some of the things we've heard today, accelerated settlement, and yesterday, I mean, that's T0, that's atomic settlement that we're already contemplating and working on now. These are some of the working groups I thought could be quite relevant for yourselves. If you go back and you can scan this QR code, actually, it will bring you to the ESA website, and you can go in and have a look at all these working groups in a lot more detail, because I'm just conscious of the time. And also, please reach out to me. My details are in the agenda if you need more information. But again, I think cyber is a great one. Domestic CSDs, obviously. Excellent, and all the questionnaires, etc., that we're working with the AGC and AFME, again, trying to do the collaboration with the various associations to avoid duplication. Accelerated settlement, we're an observer of the industry associations here, but we do have this very large working group, and we're looking at what is it going to mean in a real amount of detail. These are some of the events that we attend. I think I said before what we do in terms of events. This year is particularly busy, as was last year, but that will give you an indication of some of the things that we get involved with, some of the events and locations and jurisdictions that we get involved in. And lastly, our publications, and I just wanted to spend a short period of time on this, which was essentially, if you look from here, there's another 6 publications that are coming out this year. You don't have to be a member to access publications. We are incredibly generous, actually, to place all of them, as well as videos and an array of educational and guidance onto the website so that people can actually learn and see what we're doing. There's some great papers. The Future of Security Services is an excellent paper. We're taking that forward. We had some board discussions at Post-Trade 360. We're about to do a snapshot webinar on that, so that we can hear from our board what is really some of the key themes that are going to impact security services going forward. We host a symposium. It's a great event. It's in Wolfsburg. Mark is an attendee, absolutely. Actually, so are some of the people and our board members in the audience. It's on every second year. We all come together. We have a great program, but then we have a breakout session, and we have there's about 140 people that typically attend. We have capacity constraints at Wolfsburg, but we all then get into a room and a breakout, and we all work one afternoon. And with that level of brain power, you can imagine some of the themes and ideas that come up that we now think we'll need to resolve. So then we develop our program and strategy off the back of that. Collaboration, I mentioned. Here's just how we get involved globally with the various associations. So every one of those lines is actually a connection point for us. And now I'd like to talk to Mark Jem, if I could. As I say, not a lot of prep work in this discussion, but...
Not much necessary.
So, you know Mark from Clearstream. Clearstream, as I mentioned, are also on our board, and Mark participates in a lot of working groups as an SME and as a co-chair and lead. But you've heard about publications, you've heard about working groups, you've heard me talk about the benefits of ESA. What's your view?
Well, I was thinking about this. I mean, ESA is super valuable to us, and I personally value it enormously. Now, this audience, you know me as the chair of ECSDA, right? And that's interesting, because if you think about our industry more broadly than just the CSD, ultimately security services is there to move capital, help move capital from investors to issuers. And if you think of it in that way, then CSDs are one slice of the chain. Now, we organize ourselves here as the WFC. We organize ourselves regionally into the regional CSD associations. And then our colleagues in the CCPs, they do the same. They have their CCP associations each and so on. And then you have the stock exchanges, and they have their associations. And then we have the World Federation of Stock Exchanges. And then the banks do the same. You have the sub-custodians all getting together in AFME and so on and so forth. And the global custodians get in on the act with the AGC. And then, of course, we have the, as we heard from Brian, the primary market, bond market piece. ESA is completely different to all of those because we all get to sit in the same room. We don't define ourselves by the next handoff point in the chain of saying, you know, at ECSDA, how do we deal with our colleagues at EACH or AFME? We have to do that. We have to defend our interests as CSDs. But when we take a step back, then it's super important that all of the intermediaries in the chain between the issuer and the investor get a forum where we can discuss what are the best solutions for the market, all the richness of the agenda you've described, Julia. And I think that's what makes ESA so valuable. And it's actually really difficult for me to think of another forum which brings together all of the actors necessary to produce the products and the services for the end consumer that we produce as an industry. And that's what makes it so valuable.
No, one of the things about the symposium was just everybody coming together without an agenda and just really trying to understand what the issues were and actually, more importantly, how we were going to solve them. And then off the back of that level of collaboration in the working groups. And, you know, we can have 80 people join a working group or we can have 20. And everybody's there, they're interested, they're contributing, different people are holding the pen to write the papers, etc.
On the papers, value, any changes you'd make? I mean, what I love about them, oh, I shouldn't have asked that question. What I love about them is the level of content, and they can be 100 pages, which is why I use the word digestible sometimes. Sometimes it's easier to watch a video in 5 minutes and get the key points, and then go back to the level of detail that we've probably put around that. So that's one of the things I was thinking, but you've been there a lot longer than me, so I wanted your thoughts about the quality of the papers.
I mean, what's really interesting about the ISSA papers is which ones endure. So famously, there was a risk paper which I think was put together in 1991 or something, which talks about risk in security services. And in about 10 years ago, we sat together at the symposium in Wolfsburg, and we kind of realized that even then, kind of, nearly 25 years later, this was still the most downloaded paper. And a lot of what ISSA's work is to identify the core governing principles, if you like, the rules by which we all operate together, and then to articulate those using, the whole community to actually produce and deliver that work. Where ISSA struggles a bit more is when it sort of wades in on the topic of the moment. Those things tend to be more ephemeral, and then you take a step back and say, well, that cost a huge amount of effort. And, we wrote about this year's sort of latest blockchain scare, and then the ship has sailed. So for me, it's really identifying those things where we need to define the principles by which we work. That's why I love this idea of the uncertainty working group that's come up. It's very uncertain who's on it. It's very uncertain what the agenda is. It's all a bit uncertain. But the point is to identify those things and grab them and lock them down as an industry before the regulators, before governments and so on wade in and say, this is a problem, we need to do something about it. So it's really to be forward-looking and to recognize what are those emerging things, what are those emerging trends, opportunities, and threats that we can lock down and put kind of frameworks around before they jump out and mug everyone, and before we start fighting between ourselves across the value chain and saying, as CSDs, well, there's bloody sub-custodians or there's bloody issuers or whatever. And that'll come, and to some extent, those friction points are healthy, and you need that conflict, you need that tension. But at the same time, when you're designing what the whole market should look like, then you need to be doing that in a collaborative mode.
I agree. I think being at the forefront of it and then going to the regulators, which is what we're trying to do on the digital identification onboarding, and having IOSCO say, okay, let's develop some standards here. And then from standards, cascading that down into the markets, and hopefully then the regulation and everything then comes from it.
The financial crime compliance principles were an excellent example of that. I mean, for those of you who are paying attention, OFAC got up, Adam Zubin, who was the director of OFAC, he got up at Cybos in 2013, I think, we were in Boston anyway, and said something like, if you guys cannot sort this out, we will sort it out, and we will impose globally end beneficial accounting on CSDs across the whole global community, and we, OFAC, will have the power, as of course they do, to make that happen. Now, many markets operate on an omnibus basis, a commingled basis, including, of course, my own, and that was seen as something catastrophic. By simply articulating a couple of pages of principles that everyone bought into, we were able to head off that threat, but also we were able to avoid detailed regulation. And that was, that was over 10 years ago, and it's worked so far.
And I think we were talking about in Wolfsburg, they're still incredibly relevant today. That was the beauty of them. I know we have 45 seconds left. 45 seconds left. All I was going to say was, as a working group participant, that's one of the key things that we try to get our membership to join, to get benefit out of, sometimes just to listen to actually what are other people thinking about that I may need to go and talk to my stakeholders about. You've been in a lot of working groups. What are would you say, are the top things you get out of the participation?
For me, the top thing is always something that you think is a worry to you personally, or perhaps to your firm. You discover that issue that is shared much more broadly. It's often also a way of bringing home a specialist issue. So typically you will get specialists sitting together and you will discover that they all have the same problem. For example, in getting their boards to commit to an investment that's necessary in, say, cyber defense or wherever it may be, then suddenly you are no longer a lone voice in your firm where they say, oh, Mark James, he's always going on about this, we just ignore him. You can suddenly get together with like-minded practitioners and form and articulate an argument that is not just yours, but one that is shared by your peers across the industry. So for bringing peer specialists together, that is incredibly valuable. It says that time is up, so I should say this rather than Julia. For those of you who are not members, become members. I'm sure you've got the application forms and so forth, but really it's so valuable. And as CSDs, it is a super good way of talking to your customers and the communities that they represent in a very different way, as equals, as collaborators, and globally as well as nationally. So I cannot over-recommend the benefits of membership from that perspective. So sign up here.
Oh my God. Thank you. It wasn't going to be a marketing campaign, but thank you. Really appreciate it. Thank you very much. Thanks, everyone.
Thanks for Ms. McKenny and for Mr. Mark Jam. Let's make a picture. And now we invite all participants to lunch to the restaurant, which is located on the 28th floor of the Ritz-Carlton Hotel. And at 2 p.m., we will continue the forum.